Welcome back again. We now have the pleasure to welcome Penneo and the company's CEO Christian Stendevad and CFO Kasper Christiansen. So Christian and Kasper, with that, I will hand over the presentation to you for the next approximately 20 minutes, and then we have a short Q&A session as always. So you can take it from here, Christian.
Thank you very much, and thanks for all for attending this. So as you can see here, this is Kasper, and this is Christian here speaking. And just to start up, a very short introduction to Penneo, founded in 2014 by a group of entrepreneurs that had this ambition of reducing the hassle to get documents signed by replacing pen and paper with a digital alternative. And that was how it started here in Denmark. When we then fast forward scroll to where we are today, then we are a business-to-business software as a service company with an ARR of 74 million Danish kroner, 119 employees at the end of Q1, and we have more than 2,500 customers in Denmark, Norway, Sweden, and Belgium, which is our main markets. We have a key focus on digital signing and document workflows around that, and also on know your customer processes. That is part of the anti-money laundering. And we have a solid footprint within all big 10 accounting firms in the Nordics. And our aim is to become the preferred platform for audit and accounting in Europe. If I go to the next slide here, that's about our core product and the customer pains that we address. We call our products Penneo Sign and Penneo KYC. And the key customer pains are these three ones, starting with the time-consuming processes. Many processes today are manual, and there is a key focus on digitalizing those manual processes and workflows in companies. And when we look at our customer segment, that is very much business to business, and often it's business advisors to businesses. Some of these processes that are, they used to be manually, both within signing documents and approve documents and get that around, but also within the KYC on how to get customer onboarded in the beginning of an engagement. So when you start engaging, then you need to do your customer due diligence as part of the anti-money laundering regulation. And in order to do that, you need to know who are you dealing with and do a risk assessment, and then evaluate whether you are on any sanction list, and then you can start doing business. These processes are very often manual. There's also a key pain around that is compliance and security, because you need to do these kind of processes according to some compliance and regulations, but also in a high level of security. The more business that are done, that are now, not that people are meeting, but there are interactions between companies and people in general, where they do not meet, then there's, in this world where we have a lot of fraud and other things, you really need to know who you're dealing with and who you're doing business with. And from that point of view, to have a view on having the highest level of security and also live up to all the compliance requirements is very important. And at the same time, also the whole customer experience, it needs to be easy. If you have ever done, it can be either signing documents where some of you might remember when it was with papers that you had to print out, sign, and then go to the bank or to real estate or your lawyer and then hand it in or scan it and send it, compared to today where how easy it is. It needs to be easy in order to do business efficiently. And the end customers, our customers, that's what they expect. And that's also what we are known for, that is very easy to do. So these are the customer pains. Interesting enough, we have just released yesterday a compliance report that can be downloaded, where we have interviewed and made a survey among 100 professionals within our industries where we are operating. And the key message there was that what was some of the most important and what they're struggling with is how to stay compliant, how to understand all the AML regulations that they need to live up to, and then stay compliant. And 30% of the ones that we interviewed say how they do it is through manual processes today. So this view on how can we support an efficient solution, that's what they were looking at. So you can download it and get some more insight from that. And when we tap in and see how is the market overall, here are two different sources from some analysts that are viewing at the global market for digital signatures. That's one of them that is growing, and that's not only in globally, but definitely also in Europe. And then the other one is the KYC market that is also growing, both of them. And in general, seen from a European perspective, you can say the whole digitalization is very uneven across Europe. We might, when we look at the Danish market and the Nordic market, we are now used to that a lot of the digitalization have happened already. But that's that we can continue that. We are not be fully there, but especially when we look south the border of Scandinavia, there are some clear improvements that can be done, both on the digital signature market, but also on the KYC. And a lot of it is driven by regulatory demands that are simply increasing in those industries where we have our focus, and then also in general some structural drivers that help that demand. And that is even that we have experienced, and also other companies have experienced, a microeconomic climate that are weaker than just a year ago or 2 years ago. But even under these market conditions, yes, there is a clear market that we are tapping into that is growing. And if we look at how we have our market, our strategy is a twofold strategy. And one thing is that we grow in our existing market. So where we have a position, a strong position, we grow further. But we also have a clear view of the geographic expansion into new markets. And how we do that is by upselling our KYC product to auditors. That's one of our investment streams. So we have a lot of auditors today that have our sign product. They also have a need for our KYC product. So we are investing in covering those. We can also see that we have a lot of customers already, and also potential customers that are governed by the anti-money laundering. There is a need for both our KYC solution and our sign solution. And the sign solution, they have a need because they have a need on the highest level of security and compliance around it. And the KYC because they are under the regulation of the KYC. And that can be the finance sector, it can be business advisors and others. So that we are tapping into. And then we will fuel our expansions through the auditing and accounting vertical to become the preferred solution in Europe. So these are the investments area in order to fulfill our growth strategy. And the way we do that is our overall market approach. Here we have put our customers into 3 tiers. Our first tier 1 is what we call the auditing and accounting industries. We have today around 800 customers. And when we go to market into a new market, we always start with the auditing and accounting. We have co-created our solution together with them, and we tap into their work processes and workflows and their whole interaction with their end customers, and it's tailored for them. Then when we have a good position among the auditing and accounting, then we go into other AML governed industries like the finance, legal and others. And that's what we call the tier 2, and we have that's a broader sense, and we have around 800 there. And then we have the tier 3, and that's the network effect to other industries. When an auditor, as an example, when they are sending out their annual report, which is really happening these days right now, who is it that signs these documents? That's board members and exec management team that are signing them. And when they experience how the value of the solution, that's when they call us afterwards and then say, yes, could we also use it internally for our processes? So that's a big help, and the more auditors we have, the bigger we see it, and also when we have other industries that also have this on a business to business. And that's how we have grown our customer base over time since the beginning of 2014, and here we have the numbers with our plus 2,500 at the end of 2022. One of the key part of our growth plan is the expansion across Europe. And and at the same time also grow in our existing market. And that's what can be seen out of this graph, how we have grown over the last quarters, both on our domestic, that's Denmark, and then foreign markets. And when we look at new business that we're having in here, then we have a higher growth in foreign market than we have in Denmark. Because of the customer base we have already in Denmark, that is also because we do upsell, so we also are growing in Denmark. So that's how it looks. And originally we started entering Norway, and then shortly after we entered Sweden, and then we also got customers in other countries, Finland and others, and then we entered Belgium some years ago, and that had really grown. And the way of going to market in a new country, Belgium is a very good showcase for that, where we can learn a lot, and that we use also as a blueprint for entering other markets. So our first customer we got at the end of Q4 2022, and today we have more than 100 customers. And what can be seen on this graph, that's the ARR, how that has grown over the years. So at the beginning we got some visionary customers that we got on board, and there where we localized the solution towards the Belgium market for auditing and accounting, including also integrating to the local systems that they were using. And then we could see that pick up. So in 2021 we got 16 new customers on board, and when we can see, okay, now it start we are good on track. Yeah, then we hire the local sales team with a local sales manager in Q2 last year. We also integrated into further systems that our tier one are using, and then we simply go from that. In our Q4, that was our biggest quarter at that point of time with 24 new customers, and then here in Q1 2023 we got 29 new customers on board, and now it represents 18.5% of our foreign ARR. So we really have grown up starting, and here these are auditing accounting, and we see slowly but clearly we see that now also other areas are coming in from other industries. And it's the exact same model that we are now evaluating in Germany. So we look at Germany as the next possible market opportunity, huge market. When we look at the numbers compared to Belgium and the Nordics are much bigger. The critical part of looking into any market, whether it's Germany or other, is are they ready for solutions like ours? From a regulatory point of view, yes, the regulation is there. Electronic ID according to there's a EU initiative to roll that out. There's also in Germany a strong political, we need to digitalize. We are clearly behind some of the other countries, so a really strong political push for it, and that's where we evaluate by having a concrete customer dialogues with it. Are they ready now, both for our sign and our KYC? And then if that's true, and we can get some of the visionary customers on board, then basically to copy the way we have done in Belgium with all the learnings, of course, do it even more efficiently and then grow out of that. So that's how we see also the expansion plans. And then turning over to you, Kasper, to look into our business model.
Thank you, Christian. The next 4 slides, I'll dive into our SaaS business case. And as we saw previously in this SaaS webinar, Martin was talking about a lot of SaaS numbers and so on. And I think that I could check mark a lot of them, meaning that we have the numbers, we're following the numbers. And on the next 4 slides here, you will see that we are having a lot of them. But I completely agree with Martin. It's pretty important to stay tied to your numbers and know how they're actually performing. The first slide here shows the historical perspective of our ARR development. Meaning, the first part here, then we have grouped all the customers into the year they become customers and show the annual value of that customers, a group of customers. So in the bottom here, you can see the annual value, the ARR from the customers being customers in 14 and so on. What's important for us is to see every cohort is growing year over year over year. And then the figure behind that is that we are focusing on selling new use cases, increase the engagement in our platform and so on. If we talk about our first product, Penneo Sign, And secondly, in the late 2020, we acquired a software out of a company called CLA Reply. Now we call the product Penneo Know Your Customer. And then we use this product to also do cross-sell, not only upsell, but also cross-sell to the same customers. Christian told about the tier 1 and the tier 2, and this second revenue stream is also relevant for those two tiers, the most important tiers. Martin talked about the importance of having a low churn. We consider a churn below 5% as a strong low churn. I haven't said it in any quarter report that it's 5%, it's always below, but yeah, it's a hard work to stay that low. At the end of Q1, when you look 1 year back, it was 4%. And on top of that, we added 17% in uplift and cross-sell, meaning that the net retention rate is 113%, taking us from our AR on 58.5% to 65.9% million Danish crowns, sorry, on the current customer base, the customer who was customer before 1 year back. On top of that, we add new customers, and it's pretty important to focusing also on getting new customers in, since we see new customers as a marketplace for expansion and revenue stream and so on and upsell. This chart shows, normally if this was a regular investor call, I would showed you a table of all the SaaS matrix, meaning customer acquisition cost, what is the AR for new customers, what is the average revenue per account, and so on. But today I've chosen to show one new customers. Why does it make sense for Penneo to add on more customers, add on more sales rep than we actually could afford to? And the next slide, I'll come back to our historical view on the cash of the AR growth compared to the cost in Penneo. But one new customer relationship. At the end of Q1, looking 1 year back on this 12-month period, on average, all new customers had a start AR on 20,000 Danish crown, and it cost 34,000 Danish crown. Why does it make sense to have a new customers if it costs more to get the new customers in? On all our annual report, we also calculate the average development of all cohorts in the first 5 years, and what we see is that on average it's approximately 18% the customers growing the first 5 years. And in this chart, I have shown you that the 20,000 will be to 24,000 in the second years, and 28,000 in the third years, and so on. And if we add up all the revenue from the first 5 years, it adds up to 143,000 Danish crown, and it's more than 4 times the CAC. Alone in this sense, it makes sense to actually have more customers in, since the investment case is pretty strong. And I have only given you 5 years here, since if you look at our low churn, you could calculate that a customer will last for at least 20 years. But since we are only 9 years old as a company, we do not give these numbers out. So you might do your math yourself. How profitable is it to get 1 new customers in? This chart shows the historical phases in Penneo. The first 4 years it was kind of startup years. We got some small funding, soft fundings in the beginning and so on, up until 18. During 19, we prepared for the IPO in 2020, and we have a bridge funding, meaning that we start hiring more people than we actually had AR for, meaning we was profitable up until 19, but then we start actually hiring more and more people, even that we couldn't afford it, but then we raised capital to do it. And in 2020, along the IPO, we raised 50 million, and then we pushed the speeder and start hiring a lot of new people, meaning a lot of new developers and a lot of new people in marketing, a lot of new people in sales, and also investing into getting the infrastructure right for being scalable, also in terms of software and so on. And in the end of the first investment period, you saw that the cash position was going down, and that's a part of hiring a lot of new people. And then in spring 2022, last year, we raised additional capital. But if we hadn't raised that, we will see that the cash position will start going up again at the end of 2022. So now we are in the second year of the second investment period, meaning that in spring last year we raised this 59 million Danish crown, and now we deployed. We have hired a lot of new people, as Christian also talked about, and we have to say that we raised capital and we are not profitable. And Christian will also talk about this later on in our guidance. It's not the plan to be profitable this year, since we have a plan of having more growth for now. But we are also pretty strong about our opinion when it comes to deploy cash. We are always doing cash forecasting at least 2 years ahead, seeing that if our performance is as it is today, we can see that our cash flow is going up again, meaning that we are never running out of cash. So even that the fact that we are not profitable for now, we can easily be it if we stop hiring, because we are hiring a lot of people that we do not have to, but we believe it's a good investment to put more into to product development and more into the sales organization. The next slide here shows the relationship between the ARR growth and the negative free cash flow. For me, it's a pretty honest way of showing how much does it actually cost to grow. By growth, then I also says that the result of investment is a short-term period growth, but you also need to take into consideration that the second part of investment is also product development, and it takes a period actually to see the product be developed and take advantage of that development. And in the beginning of an investment period, you hire a lot of new sales reps and so on, and before they actually getting up to speed, being ramped up and so on, learn all the systematic from the old sales reps and so on, you'll see that we have a period with a lot of new people, meaning that it costs more than we are actually gaining the ARR. At the end of Q1, we have a pretty strong cash flow in Q1, why the number was pretty good. But the next 2 quarters, you'll see that we are getting closer to the 1.7 Danish crown in cost per new ARR crown. And the end of this year, we'll see that we're approximately on the 1.4-ish in that level, meaning that we are now in the middle of the investment period. And when we come at the end of this investment period, we'll see that our growth is stronger compared to how much it actually costs, like we also illustrate on this chart.
And then last but not least, here we are just putting through our guidance. And the key message when we look at our guidance is with these SaaS metrics that we have not just gone through, we believe that growth is number one priority. And with the cash that we have raised, then we invest in that growth. So we have the expected 87 to 95% growth, and that is corresponding to 23 to 34% growth year on year. And looking at the EBITDA, that's a negative, which means yes, we are continuing investing in that growth, because we believe that that's how we can develop our company and become the most valuable by having new customers on board. So that's also that kind of decision, and that's part of our plans to do that. So that ends our presentation So now
Perfect.
Question?
Yes, we have a few questions. Minutes left, so let's take the questions here. Maybe you can answer a bit quick on that, so we can hopefully reach all of them. So first, what is Penneo's market share in the Nordic markets within digital signature? Do we have these numbers?
We don't have these numbers, but if you look at, it's basically the ordinary accounting. For example, in Denmark, 81% last year were signed by Penneo. So there, they can say it's large. It's less in some of the others Nordic countries, but we have a very strong position among our tier one.
Perfect. And maybe this is for you, Kasper. If you should choose 1 or 2 SaaS metrics, which ones do you consider most important for Penneo when you track this, when you track the numbers?
I always look at the overall growth compared to how much does it cost in cash flow, since that's our constraint for now. I do not look on EBITDA at all. I look how much is it actually cost to growth, and how can I deploy this cash to getting more and more AR.
Perfect. And then just one quick question here for the German markets. One said here, the German market seems to be a huge opportunity, and the market seems to be ready for solutions like sign and KYC. Which catalyst are you waiting for before entering the German market? Or do you perceive any obstacles that may hinder your entry? when can we anticipate your market entry in a country like Germany? So just very briefly on that one.
Yeah, so right now we are in concrete dialogue with customers to see if the timing is right. We're also in dialogue with the authorities, if they really are pushing like they say. And in those two combinations, we need to do it at the right moment. So, but we are here to look into it on how to do it. And we believe, for example, compared to 2 years ago, then the timing would not have been right for 2 years ago compared to now.
Okay, perfect. All right, thank you very much for the presentation, Christian and Kasper, and it was a pleasure to have you here.